In today's video, we're going to be taking a look at Bitcoin in regards to a possible upcoming correction. Will Bitcoin reject from the $38,000 to $40,000 resistance, or are we going to see a breakthrough moving into the upcoming week? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic weekend. In today's video, we're going to be discussing the possibility of a correction from the major $38,000 to $40,000 resistance. Is Bitcoin going to correct in the new week? Are we going to see CPI data push the market down, or will we see a breakthrough this major resistance and a continuation to 48K? These are some of the questions we'll be answering, so stick around to the end. Now, before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin, focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get updates on charts, videos, analysis, educational posts, and so much more to keep you in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in trading, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis, so you can see how much profit we have been making in this channel is absolutely insane. Not only will you get access to this group, you'll also get access to our group chats, our general chat, our trading and chart and education chat, our trade setup chat, our help, our video, and our daily news chat. If you're interested in getting access to that, go ahead and contact me in the pinned comment of the free channel for more information. Let's go ahead, guys, and dive into today's video. Now, this is the second time I filmed this video today. It was the first time I didn't even have my mic on, which is my fault entirely. So let's dive into it, starting on that market data. So 24-hour volume is down 19.96%, sitting at a total of 95 billion. 95 billion is actually still relatively high for the weekend. So with that, we generally see high liquidations, right? High volume, high liquidations. At 147 million in liquidations, this is up around 0.1% in the last 24 hours and is fairly split between 92 million for longs and 55 million for shorts, indicating we have seen a large move upwards, okay? And we have seen a bit of a wick, a bit of a large wick or a correction on a short-term downwards, liquidating a whole heap of late long entries. If we do take a look at Bitcoin's price action, we can see Bitcoin actually rallied aggressively all the way up to 38K and corrected aggressively initially right from that down to 36. And just in the recent price action, we've seen some chop and sideways price action, again flushing out some of those later positions. We're discussing exactly what we expect is happening and what will happen in the charts in just a moment. Moving back to that market data, we can see the volatility index is moving downwards ever so slightly. This could be indicative of overall exhaustion or weakness developing in the charts, as we do have volatility dropping and price action rising. On the 60-day period, we can see a very similar thing, but it is more or less suppressed. We see a little bit more of a plateau over here on volatility index as the price action is rising. Again, potentially indicative of compression or exhaustion on the price action. If we see a surge in volatility as Bitcoin breaks through that $40,000 resistance, we will very likely see a strong move up to 48K. However, if we see a surge in volatility as Bitcoin breaks down short-term supports, we could see a bit of a correction develop. Before we get into Bitcoin, let's talk about the higher stuff. So DXY is of course looking relatively good over here, and the DXY will remain bullish provided it remains above the parabolic curve, which is represented by this blue trend line. The DXY on the short term is above the short-term structural level of support, which is 105.5. So we did close out that last week relatively bullish. We do expect the DXY to continue upwards into the new week, provided CPI data comes out bearish. If CPI data indicates inflation is rising, we will likely see the DXY continue upwards. However, if inflation data comes out bullish, which is, of course, inflation is dropping month on month, we will likely see the DXY correct, and that will be bullish for the markets. Let's take a look at that data. We can see the core inflation data and inflation year on year, month on month data is coming out in a little bit over 32 hours. So we can see the data over here. In fact, we have seen the inflation rate month on month actually increase for the last 2 consecutive months. So this is suggesting again, inflation just in the short term is beginning to rise again. So you're probably thinking, well, why is Bitcoin continuously going up if inflation has been rising? There is 2 reasons to that. Number 1, inflation is actually good for asset prices, provided there's no connotation attached to that rising inflation that interest rates will rise in the future. If there is a connotation that interest rates will rise in the future, it will negatively impact the market risk or the perceived systematic risk in the market. So then why is Bitcoin still going up if the perceived systematic risk is rising? We'll get to that in just 1 second. But looking at inflation, we have seen inflation plateau. In the last 2 months, we have seen inflation rise. If we continue to see inflation rise, interest rates will likely start to increase at some point. This, of course, this increase in interest rates or the expectation that interest rates will in future increase forms the basis of the perceived systematic risk, and perceived systematic risk directly negatively impacts the estimated return compared to the market risk for asset classes. That is why we have seen the stock market correct. That is why we're seeing the DXY go down, the S&P 500 go down, and the Dow Jones go down. But then why is Bitcoin so aggressively up? If the societal perspective or other governmental policy create an environment of which is so bullish that offsets the rising perceived systematic risk, we will see that exclusive asset class actually perform against the market risk. So in this instance, the ETF narrative has been driving the price up at a rate stronger than the potential threat of future interest rates can drive the price down. So we have a scenario where cryptocurrency as an asset class is moving against the overall market risk, which is resulting in actual Bitcoin and cryptocurrency go up, while the stock market and again, the DXY has been suggesting corrections or bearishness. So this is definitely something to be interested about and something to be watching, but so that does shift at some point, we can expect a flip or opposition to occur. That means we will likely see this strength continue while the ETF news remains kind of pending, right? When we get the ETF news come out, we could see a pump and dump environment, we could see a continuation upwards, but we'll likely see this strength continue provided that ETF news is kind of still pending and the overall expectation or narrative of the ETF news remains bullish, as there'll be no reason for cryptocurrency to massively correct until we get that news actually released. So let's go ahead and discuss what is happening for Bitcoin, and before we get into it, we'll jump into our ads. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Just one more quick note about that Bitget ad. We do have probably the biggest ever Bitget promotion campaign launching very soon. Now the giveaways are absolutely insane. I don't want to give anything away. I don't want to tell you guys what it's going to be yet, but just wait and find out. It's absolutely insane. I'm very, very honored that we'll be able to actually provide this for our audience and give you guys some opportunities to win some of these prizes, because some of them are actually insane. I'm going to try and get a few of those for myself. So let's go ahead and jump into it. And Bitcoin, like we said at the start of the video, is now retesting that major 38 to $40,000 resistance. If we are going to see any correction, there is 2 likely opportunities or places of which these corrections are developed from. Number one is the obvious one, which is 48K. And we can say 48K because if we look at the high time frame chart, we know the dotted trend line represents 48K and the dotted trend line represents the dead cat bounce high of the prior bear market cycle. And in every instance of retesting the dead cat bounce high, the dead cat bounce high, we have seen corrections for Bitcoin. So if we go ahead and delete the chart over here, we can see the dead cat bounce high retest resulted in a rejection. The dead cat high retest resulted in a correction. So we will say 48K is going to be a major correction zone for Bitcoin. But the second one is going to be 38 to 40,000. The reason being 38 to 40,000 is the first and only major high time frame resistance that Bitcoin will test between the prices of 32 to 48K. So between this entire range of price action, this level, this 38 to 40 is the only and most important resistance on the high time frame. And therefore, we are very likely to see weakness develop at this level, which we are seeing already with the volatility dropping and price action rising, which we are also seeing with the RSI falling and price action rising, again, bearish divergences, okay? We are very likely to see this area act as a point of a roadblock for the price action, which could develop into a short-term correction or even a correction to 32,000. We're discussing the possibility of that in just a moment. Now, let's say hypothetically we break above 40,000. We just break right through as a resistance. The next target is 48K. The reason being, if we take a look at the VRPV, we can see the VRPV significantly drops off until around 47.5K, 48K, indicating we enter an area of lower historical resistance. If we enter an area of lower historical resistance and we have positive volatility, we're very likely to push aggressively up to 48K. Furthermore, the macro charts are suggesting 48K is going to be a target for Bitcoin. So we're looking at that price range. However, nothing goes up forever, guys. Things do pull back. And Bitcoin has seen a massive 19% rally since breaking over 32,000. It is not only unwise, but it is also unrealistic to expect Bitcoin to do a 50% pump with no weekly or daily red candles that actually result in short-term corrections or high time frame corrections between 32K and 48,000, okay? We are not yet in a bull market. We are very, very strong. We are in a monthly uptrend, but we do have the possibility to see corrections from these levels. So like I said, in today's video, we're going to talk about on the short term exactly what you need to be watching out for these corrections to develop and what you need to be watching out for the price to continue upwards. But initially, resistance is resistance until it is not. And if we are going to see any correction between the entire range between 32 to 48,000, the 38 to 40K level is going to be the most likely area of corrections developing from. Now, if we do see a correction from this level, remember guys, it will be a healthy correction, meaning we remain in a monthly uptrend provided the price stays above 32,000. Only if the price breaks below 32,000 on a monthly candle will we actually be at risk of turning the macro charts bearish again, okay? Keep that in mind. So we're remaining a monthly candle above 32,000, we will technically remain bullish and the high time frame chart will continue in an upward trajectory, okay? It is only if we close a monthly candle below 32,000 are we at major risk of a high time frame continuation. But again, the probability of that is very, very low right now. It is very, very low. It's not actually zero, but it's very low. The reason why we can't say with certainty is because only after we retest 48K can we say that there is zero chance of us closing a monthly candle below 32K. And I say zero, obviously, hypothetically. I don't actually mean 0% chance. But based on historical data, when we have retested that dotted trend line, in the last two cycles, we never closed a monthly candle back below that horizontal trigger. In this instance, the horizontal trigger is 32K. So if we do retest that, we can say based on prior data, it is very unlikely we'll see a monthly candle back below 32K for Bitcoin again, okay? Until then, there is still a possibility, but it is very slim. So let's talk about this, guys. where are we seeing weakness? If we go down to the daily chart, what we can see already is we can see the price action went aggressively up to retest the next major high time frame resistance. We broke out of a high time frame resistance, we went upwards, we retested a high time frame resistance. It is natural that we start to see some exhaustion at this level. It is natural we start to see volatility drop. It is natural we start to see short-term corrections. The big thing is, are these short-term corrections, is this reduction in volatility, is this exhaustion based on momentum going to result in an aggressive correction to 32K, or is it just going to result in a short-term blip before a continuation upwards in the new week? So, to answer that, guys, we need to jump down onto the short-term charts. Let's go ahead. So I've gone ahead and labeled out the most important levels on a horizontal scale. Like I said, this is the second time I've filmed this video, so all of this stuff is already here from last video. The most important levels we're looking at is, of course, the 38, the 40, very, very obvious, okay? The 36 and the 33, 350. These are the most important levels. These are all technically trigger levels. A trigger level it simply is a price point on the chart where, if broken below or above, will significantly shift a probability of a continuation in a certain direction. That is what a trigger means. Meaning, like we said, if we break above 36,000, we will very likely see a continuation to 38. And we saw that. Okay, perfect. Let's take a look again, guys. If we break below 36K, which is the gap in the VRPV, also a major support level, we will actually see the trend move into a downtrend, okay? We're going to see overall weakness represented by a rejection and a loss of these local highs. If we see 36K lost, we are very likely to retest the major uptrending diagonal trend line represented by this solid diagonal line, the solid diagonal black line. This is the overall trajectory of price action. If we lose this trend, we will see a correction to retest these lows at 33,350. So what does this all mean to you? Well, if we see that correction, okay, and we are expecting a correction because, again, we've retested 38, which is resistance, okay? We've rejected from resistance, so provided we remain under this resistance, we are now actually in a short-term downtrend targeting 36. That is what's happening right now. We're a short-term downtrend targeting 36. The question is, are we going to lose 36? Well, it depends what happens over the next 24 hours and 32 hours with the CPI data, of course. But if we see the price action lose the 50 EMA, okay, prior to losing the 36, the loss of 36 probability increases. If we lose the 50 EMA, that will be the first time we break below the 50 since we broke above it on the 16th of October, right over here. That will represent a shift in trend. We have a relative strength, okay? If we break down, we will have relative weakness in the price action below the 50 in comparison to all of the price action above the 50. That could potentially drop the price lower. So back to the short term, guys. If we lose a 50, if we lose a 36, we will retest the uptrending support line. This is the first bounce point. This is the point where Bitcoin will decide whether or not the correction from 38 is going to be nothing more than a short little blip or will actually result in a strong correction. If we retest this level and bounce, we can bounce back above 38 and continue to 40. That is definitely a scenario. However, if we lose this uptrending diagonal trend line, we are very likely to come down and retest 33.35. And if we lose 33.35, we will be dropping, if not to 32,000, just above 32,000, or even potentially 30,600. But again, even if we see any of this play out, it is very, very unlikely we close a monthly candle under 32K, okay? While we remain above 32K, we are in a macro uptrend. We would like to see that continue, and we do remain above 32K for a monthly. We will be in a macro uptrend. So to summarize everything, guys, the high time frame charts are approaching the first major resistance since breaking above 32K. Resistance is resistance until it is not. We are starting to see short-term signs of exhaustion and short-term signs of potential correction. The potential correction could develop, and if it does develop past the 36K level and the 50 EMA, we will likely see the correction develop even greater, okay? If the correction does not develop and we break back above 38, we are likely to see 40. If we break above 40, we will likely see the trend continue all the way to retest that dotted trend line on the monthly, which is the 48k level. However, I would also like to note, guys, as the price action continues aggressively upwards, the probability for short-term corrections increases. It's very, very unrealistic, and I would say almost idiotic, to expect the price action to permanently go up and permanently be green. It is completely normal and completely healthy to see short-term corrections in an uptrend, and that doesn't make you bearish. That makes you realistic, okay? That doesn't make you a perma-bear. That makes you a trader. You're watching out for these potential shifts in direction to capitalize on. The overall uptrend is still intact, even if Bitcoin retests 32k. Don't be blind, don't be stupid, be objective, be realistic. Thanks for watching. I'll catch you guys in the video tomorrow. Cheers.